Thanks for joining us on the NexGen webinar today. Before we start, I'd caution that the presentation might contain some forward-looking statements which can be viewed on the company's website. With us today are Leigh Curyer, who is the CEO of NexGen Energy, and Travis McPherson, who's the SVP of Corporate Development. NexGen is listed on the TSX and on the NYSE under the ticker NXE and has the biggest yet to be developed uranium asset in the world with an NPV of $3.7 billion. Leigh and Travis will take us through an update since their last presentation with us in May, and then we'll open up the conversation to Q&A, so feel free to enter any questions in the dialogue box below. With that, I'll leave it to Leigh to give us an update.
Yeah, thank you, Tina and Deborah. It's great to be on Adelaide Capital again to give an update on NexGen Energy. As Tina alluded to, NexGen is developing what is the world's largest, highest grade project located in the northern part of Saskatchewan in the mighty Athabasca Basin, where the deposits in the basin on average are over 100 times that of deposits in the other parts of the globe. In order to discover, develop, and operate a mine, and particularly uranium mining. Back in 2016, and for a very long period prior to that, the Athabasca Basin in Saskatchewan was the home of uranium production worldwide in terms of it was the largest producer of uranium. And we all know Kazakhstan has taken that mantle since 2016 through the expansive development of their ISL fields. With Arrow being discovered in February 2014 and all the development work that we've done over the last 7 years, we are very much looking forward to advancing the Arrow project right through into construction and production in the near future. Not just Arrow. At NexGen, we also have an extensive land position throughout that southwestern section of the mighty Athabasca Basin. The land position is over 320,000 hectares. And we also have a 54% ownership of ISO Energy, which recently discovered the Hurricane deposit in the northeastern side of the Athabasca Basin, which is home to the current mills that are operating in the area. So that's the traditional side of the Athabasca Basin, where we've seen a lot of production and development. NexGen is in the the southwestern side of the basin, with what is a phenomenal asset and currently going through permitting. We've submitted a number of engineering studies. Our first one was a preliminary economic assessment in August of 2017, which really did highlight the economic power of the Arrow deposit. That was then elevated to a pre-feasibility study released in November of 2018, which showed very good consistency through the PEA into the PFS with a far more data points. Basically, we brought the drilling in from 50-meter centers to 25-meter centers. We got a complete uplift in the resource as a consequence of that. And around the engineering assumptions. We're in the final stages of completing our feasibility study, which we are scheduled to release in December of this year. And again, I want to emphasize to investors out there, you're going to see very strong consistency into that feasibility study as well. But what comes with it is another level of detailed validation of the resource and all engineering characteristics and environmental characteristics of the Arrow project. So we're very much forward to that. It'll come with a updated resource statement as well, because in some sections of the deposit, we've even tightened the drill spacing to 9 to 10 metres. And so we've had just under 400,000 metres of drilling and a very good assessment on all the technical, metallurgical, hydrological aspects and all the environmental aspects of the project, which we've been working on over the last 7 years. That feasibility study is going to be embedded into our environmental impact statement, which we'll be lodging in the mid part of 2021. And at that point in time, we'll have a complete documentation, formalisation, all that extensive work we've done over the last, well, before 2014, but all the way back to 2013. And as a lot of the investors in NexGen know, we have an incredible support from the local communities with respect to the project. You know, as an organisation, we're very proud of a lot of those programs that we've initiated and worked alongside with the communities with respect to the focus on the schools and health, education, recreation, and also economic and employment. So that is where we are, a very brief snapshot as to where we are. What has happened since we discussed or presented Adelaide Capital since last April was that, you know, that was on the back of COVID just launching, and we saw a rapid increase in the uranium price go from $20 a pound up to 30, just under 34, as we would normally expect during the summer months, and we see every year. And I've been in uranium since 2002, and this year's been no different over July and August. You always see a lightening of the transaction volume in the spot market, and we've seen the price kind of range from around $32 to $34 a pound. At the moment, it's about $31 a pound. And we saw effectively a 50% increase in that uranium price at the start of COVID. You would normally expect to see that price come way back down. And if there was an ability for that price to come right back down, I think we would have already seen it. So I think whilst we've seen a lightening in uranium transacting volume over the summer months, what the takeaway is that we haven't seen that price go down. And we're just about to come in the fourth quarter, which is traditionally, you know, from late September all the way through to May and even June. That is when you see the heavy weighted transacting of uranium on the spot market during those periods. And we're about to come into that period just as we are going to feel the consequences of all the production cuts that occurred as a consequence of COVID. Travis will no doubt give you some figures with respect to the reduction in uranium production as a result of COVID. But I think that the bigger takeaway, this stressed supply side in the uranium market was already clear all the way to 2016, and we've seen substantial reductions in Kazakh production, and we see that they've committed to keeping those reductions in place right through to the end of 2020. And so this isn't some temporary consequence on the supply side. The consequence of this is going to be felt well into this decade and the latter parts of this decade. And we've seen that in uranium before. There's been, like, I was in the industry back in 2002, and then 2004, which was off the back end of a 10-year hiatus in the uranium price where it didn't go above $10. All of a sudden went right through to $140 a pound between 2004 and 2008. And that is purely a consequence of a complete underinvestment of the decade leading into that period. We've had exactly the same thing. 2011 Japan caused a complete underinvestment in the supply side of uranium, and we're about to feel the consequences of that. And demand is now the most it's ever been historically. It's now exceeded what it was the year prior to 2011. And we're seeing an absolute expansion in nuclear energy on a global scale. Clean air energy is the number one actionable item on the planet in order to fix up the environment and lift the average standard of living through putting in safe, reliable, clean air nuclear power throughout the planet. And I think what COVID's highlighted is that the focus on the quality of living is now more relevant than ever. And you've seen the Canadian government, both federally but also provincially, led by Saskatchewan, where we reside, really put a lot of focus and effort into small modular reactor development. We've seen in the US the first small modular reactor has just been commercialized. And I just want to make the point, it feels like it's some of the commentary in the media is that this is new technology. It's not new technology. It's an adaptation of small modular reactors that the US military have been using since the 60s in submarines and aircraft carriers, where they're about the size of a Mini Cooper, and they power those aircraft carriers for over 20 years before they need to refuel them. You know, imagine deploying that type of power source with clean in parts of Africa where only 2% of the population. When I said earlier, it's the number one actionable item to increasing the world's average grade of living amongst the entire population. It is clearly that. So it's a very exciting position that NexGen is in as a company. We're working on a project which is going to have a material impact on the global population from an environmental perspective, an average standard of living perspective. And as shareholders of NexGen, you get not only that, those two fantastic objectives, but also I think you're going to experience just phenomenal returns based on where we are today and the path that we have ahead of us that we are successfully executing on.
Thanks, Leigh, for giving us an update and a bit of a macro picture as well. Travis, I don't know if you have any general comments on the macro picture to add into that.
Yeah, I mean, I totally obviously agree. I think, you know, when you kind of step back, what's COVID's really done is obviously, I mean, notwithstanding the tremendous negative impacts of it, but there are some silver linings, and one of which is, you know, I mean, we put out a graphic where, you know, you saw a picture of places in Delhi or in China where they haven't been able to see the stars at night or see the Himalayan mountains in entire generations. And with, you know, all the pollution stopping, they've been able to do that and see those things for the first time. And I don't think the world's going to want to go back to the way that it was. And the only way to sustain that going forward, and I think it is getting recognition, importantly, in really important markets, is through nuclear. I mean, you've seen China commit to net zero emissions by 2060 now for the first time ever. Again, the only pathway to do that is with substantial build out in or reliance on nuclear. It's not the only way, but it has to be a key part. And I think that's recognized globally with the decision makers and policy makers.
Yeah, I think I'm surprised, even though there's been a move, I guess, more in the spring on the pricing of uranium. I'm surprised it hasn't moved as dramatically. We're still a long ways away from the highs, so there's definitely more to come. Let's open it up to Q&A. For now, let's talk about the fundamentals of Cigar Lake here, because that's something that's obviously pretty topical. It's September. I think in July they said they were announcing a restart, but I haven't heard much news on that front. Do you guys have an update on or any thoughts on what's happening with Cigar Lake?
Yeah, I what we've heard from the company representatives that they made price to everyone, considering what was previously announced about closing it. But it's good to see, and the market's far bigger than just Cigar Lake alone. Cigar Lake is a very important production source for US utilities in particular, because the Northern Native of Canada providing safe, reliable uranium from a very sound political jurisdiction is very key to their fuel procurement. And so we're pleased to see that it's gone back online. And I think that Tina, to your point, we've seen uranium price around $30 a pound. I think everyone needs to have a realistic expectation. Those important production centres such as Cigar Lake will require, and McArthur River and Cameco have been very transparent with that in saying that they need materially higher prices in order to produce profitably from those production sources. That's just a function of where the market is at the moment, and I think it's in the interest of all shareholders and observers in the uranium market to have a real objective view of the state of supply. It's under enormous stress. Uranium prices at current levels, even though it's gone up 50% since the start of COVID, are still nowhere near where they need to be in order to maintain those very important production centres here in Saskatchewan. So as a commodity, I look at all commodities. I invest in gold and copper and all those other ones, but uranium, the most exciting price forecast profile out of all the commodities in the resources space as we speak. And we've been in a period of 10 years of really very limited excitement. But as I said, remind investors, go back to 2004 and 2008, those phenomenal returns and price rise in uranium to $140 a pound in 4 years. And the result that had on uranium equities right around the globe was just, phenomenal. And I actually think this period that we're coming into is going to be even more significant than back then, because we don't today have the 5 top producing mines that we had back then. There was a far better security of supply that we see today. I think the price forecast for uranium during this next stage and period has set the record for the most phenomenal that's ever been seen before.
Yeah, and it's interesting because I know that Cameco has publicly said that they won't be able to make up for the lost production this year. And then you have the Kazakhs who are having their own issues and being impacted by COVID, saying that it could have as much as a 20% of impact on production going into 2022. So that's obviously a major contributor to the supply, and that's going to have a significant impact on pricing as well.
Huge, Tina, and look, they've typically been one of the largest suppliers to the spot market over recent years from Kazakhstan, and now they've even been very transparent in saying we are likely going to become spot purchasers. So it's a real double whammy where you've got the entities that were supplying, not only removing that supply from the spot market, but now actually looking to buy on the spot market from other sources. So, I think it's incredibly positive with respect to the uranium price forecast going forward. And I think, a lot of the uranium traders that we speak to and have very sound track records all agree that they feel that the price of uranium is going to be substantially higher in the near future as we're coming into that traditional buying season of spot uranium.
Yeah, I might just add something quickly. I think, it's also important, like uranium is one of these commodities that the spot price actually isn't a good indicator of the fundamentals of the industry. And I mean, I guess it's important from an investor point of view to have some kind of relevance on a price, but the reality is, to Leigh's point, what we talked about earlier, the industry is extraordinarily healthy today. Like there's a massive, in terms of from a supplier perspective, it's an extremely constructive environment. Like you have massive deficits, structural deficits growing long-term, no kind of immediate way to fix that really, other than just building new mines and getting new mines operating as old mines shut down and that sort of thing. So it's a really healthy environment, and it's just kind of frustrating, I guess, at times when everyone's just focused on the day-to-day move in the spot price, which really isn't an indicator at all of those fundamental pieces that are going on.
Yeah, and looking a little bit further out, I think Kazatomprom has said also publicly that the current pricing level doesn't support any capex buildouts. So that's another consideration that's going to affect supply in the long term. And maybe in terms of capex and operating costs, you guys can touch on NexGen's operating costs and what you expect that to look like.
Would you like to lead that?
Oh, sorry, you were kind of breaking up, Tina. I couldn't quite hear you. What was the question?
Maybe you guys can just reiterate your operating costs that you're expecting from NexGen's assets.
Yeah. No, it's the lowest in the industry, by a reasonable margin for sure. And that's really driven by the technical setting and the grade and the size of it, obviously. But it is quite unique without getting into the specific details, but effectively you're mining conventionally. So think of it as like an underground gold mine, but because it's uranium in the Athabasca Basin, the value of the rock that you're extracting relative to the costs incurred for exploiting it is, massive. So the costs are really, really low. Margins are really high, and therefore the returns are high. And the capex intensity is, the lowest in the industry. Like if you have that typical chart of capex intensity, we're, in the bottom left corner where you want to be for that. So.
Just getting into some of the audience questions, can you comment on the IBA situation, specifically on the Métis going public?
Yeah, sure. Look, we have a very long history since 2013 with the communities, and the Métis Nation of Saskatchewan is the umbrella organisation for the Métis locals. And as we've had a very long history in terms of operating in the area, and very, very successfully with all the local residents. In 2019, we executed study agreements, which reflected a lot of that work, consultation and engagement that we'd done, and the programs that we'd done in the communities. Do traditional land use studies, joint working group meetings, etc., to incorporate the traditional land use and cultural studies into our environmental impact statement. And both parties have agreed to act in good faith to conclude an IBA. Now, we are still very much on that track. The MNS have directed or filed a statement of claim with respect to those negotiations, and it will be heard in the courts in the very near future. We are very transparent and in terms of our approach to the negotiations, and very confident in our position. So I really have a lot more to add other than that, we're working side by side with the communities, of which are 4 in the local project area, and have a great relationship with all of them.
On the corporate governance side of things, Brad Walls obviously joined the team about a year ago, maybe a little bit more than a year ago. Can you speak to how he's been contributing to the team so far?
Yeah, Brad did join the board. It's actually almost probably 2.5 years since he joined the board, and he's been a great director in the sense of providing us guidance on the navigating the political environment. But also, he's much more than that. I think that's why he's such a great premier. He just has an absolute passion for working on companies and projects which he sees are going to have a fantastic benefit to a very large number of the population, particularly in his province of Saskatchewan, and he immediately saw what we were doing as a company and wanted to be a part of it. And he's been a fantastic contributor to everything NexGen's done. And I just want to make the point, it's just not on, he provides us commentary on political aspects, but on all aspects of the project as well. So, he's a fantastic addition to the board, along with also other directors, some who've been there, but also Sybil Beeman, as well, Carrie Howlett as well, who is also on the board of Sask Power. We've got Warren Gilman, who I'm sure all the viewers here are very aware of in terms of his track record with successfully investing in resource projects worldwide. And so I think we have a fantastic board covering all the relevant skill sets in order to advance this project. And I think it's a real strength of the company, the board and the executive, in terms of their skills and experience. And they all live and breathe the objective of advancing this project in order to create as much positivity with many people as possible, not only in Saskatchewan, but also Canada and the rest of the world, with the provision of clean air energy fuel.
So as you advance the project, have you been talking to any of your neighbors like Fission, UEX, about ways to potentially work together to reduce CapEx or share infrastructure?
Yeah, and look, we have an absolutely fantastic relationship with all our neighbours in and around the southwestern section of the Athabasca Basin, and we have shared resources in the past and we'll share resources in the future. We are a fantastic neighbour and they're fantastic neighbours to us. There's no doubt there's some aspects of sharing, etc. would make sense. And in the future, I'm sure that will happen. What that looks like right at this moment, very difficult to say, and I actually can't say because that is for a future period.
And any progress on strategic partnerships, mergers, potential offtakes? Where's NexGen on that front?
Well, with respect to offtake, NexGen and Travis and I have had a dialogue with utilities for a long period of time now. Ever since the discovery, it immediately drew the interest of utilities, as they could see there was another deposit in Canada, in the #1 jurisdiction globally. And when you look at the technical profile of Arrow, the security of supply is clearly evident when we will be up in production. So we've maintained that dialogue for quite some time now, and as we've advanced through PEA to PFS, and we are almost at completion of our feasibility study, and then incorporating that into our environmental impact statement, I think that dialogue's going to increase even further. We have made a conscious decision as NexGen not to conclude any offtake agreements until that period of time after the EFS, after submission of the EIS. Having said that, we are in regular dialogue, and their interest in securing offtakes from the Arrow project is clearly evident.
There was a question from the audience on why there's a 6-month span between filing the EIS and the feasibility study.
Well, the EIS incorporates, or the environmental impact statement is far more broader than just the deposit and the engineering aspects of the project with an environmental component, but the EIS incorporates all environmental aspects, as well as incorporating traditional land use studies and cultural studies into the document. So the FS is a material component of the EIS, but there's also other sections, and so it's just a lot of those processes are still ongoing, running in parallel to the FS. and they'll culminate into that final document approximately 6 months after completion of the FS.
And in our last webinar, you had alluded to potentially continuing some drilling around Arrow and the extension, because you've only drilled really 10% of the total corridor. Is that something that you're still considering, or what would be the timing of that decision process?
Yeah, it's a good question, Tina. It's one that we constantly receive from investors, and I get it. You know, Arrow's massive. We all know that, but we have only explored a very small section of the Patterson corridor along the Rook I project, and we have also an 8 subsequent corridors in parallel to the Patterson corridor on the Rook I property, which we would love to get drill rigs into also. But just on the Patterson corridor, look, our hit rate of holes drilled and intersecting mineralisation is a shade under 100%, unheard of in any other project in uranium anywhere on the planet. And that, in a sense, says, you know, have we been bold enough? Have we tested it more fully enough? And even though it's massive, we have known mineralisation in and around Arrow at depth. But, you know, considering it's so massive based on all the drilling we've done to date, you know, we made the decision back in 2014 to start looking at the engineering components of the project. And for this interim period, we are focused on finalising the feasibility study and the environmental impact statement in order to lodge that in mid-2021. You know, we could revert back to doing some exploration in the future, but that would be secondary to filing completing the FS and filing the environmental impact statement. But no, it's something that we're constantly wrestling with, because we know the mineralisation there, exploration, incredibly exciting, and I've got no doubt we'll be back there in the future drilling.
Well, there's certainly a lot of uranium on the property already, so
yeah,
it doesn't seem like it's been that hard to find for NexGen anyway.
I think we make it look easy, but it gets a little more complicated at times.
I think it's worth touching on the balance sheet quickly as well, because last time you had the webinar, you had just announced this Queens Road financing, and I think had closed it afterwards. But where does the cash position stand currently?
Yeah, we have about $65 million in the bank as of today. So we are completely funded to complete the feasibility study in December of this year, and then also filing of the environmental statement in the middle part of 2021, and then to also cover all the G&A well into 2022. So we're in a very sound cash position. We have had lumpy years in the past, no doubt about that, with all the drilling that we were doing, but we are over all the lumpy spending. And so we've got a treasury which will see us well into 2022, 23, with the completion of those two key priorities of the feasibility study and the environmental impact statement. You know, the good thing about the Queens Road Capital financing was that not the amount and the terms, but we also have got that voting security around that ownership. So adding that on to Li Ka Shing through CEF, that approximately accounts for about 26% of the NexGen float. Add Mega and Richard Patricia on the board and executive of NexGen, and it's well into the 30s. So we have a very tight structure with respect to the share capital of NexGen, and we've got incredible support from our shareholders with respect to any future financings that we may do, although they are down the track. There's no doubt about that, because we're very well funded. And I'll just point out, which we've done ever since the company was incorporated, our ratio of G&A to actual spend on exploration development is very, very low. So, I'm an accountant. I can't get that out of me. We're looking to maximize every dollar at all times, and we've done that consistently. And I really do think we lead the sector in that respect in terms of the amount of money going into exploration development relative to G&A is high, and it's something that investors get with NexGen, that they know money is very, very well spent, and a lot of rigor goes around every dollar we spend. Every dollar we spend has to add to the project and the value down the track, and we're resolute and very rigorous on that.
Can you just explain the relationship between NexGen and Queen's Road for investors who aren't familiar with Queen's Road?
Yeah, Queen's Road Capital is run by Warren Gilman. Warren Gilman's on the board of NexGen, and he was formerly under CEF, the manager of that, which is Li Ka Shing's entity for investing into resource projects. And QRC, the basis of that is really 4 Australian billionaires wanting to use Warren's expertise in terms of investing into resource projects. And one of those businessman in Australia. The other one, which resource-focused investors would know about, is Andrew Forrest, who runs Fortescue Metals Group in Australia. I think it's about a $52 billion iron ore producer, wedged between Rio Tinto and BHP in Western Australia, and he founded that company and has developed it into a $50 billion entity. He loves what we're doing at NexGen. He loves the project. He loves the way we approach it with respect to communities and our technical and financial disciplines. And so it was a fantastic investment for us in terms of that coming into the company, and not just the dollar component, but everything that we get around it with the expertise and also the support from Warren and those billionaires. So it's very exciting news, Jen. And look, Li Ka Shing as well, he very, very pleased with his investment in NexGen, and is very passionate about the way the company operates and what our objectives are, and not just in the short term, but also the long term.
You also have a relationship with ISO Energy, which you touched on earlier, but they've had some pretty good results this summer. Can you give us a little bit of an update and kind of explain to us what your intention is or in the long term with the shareholders?
Yeah, phenomenal result. So look, we morphed ISO Energy out of NexGen. I think it was back in 2016 now. And basically, we took the Eastern Basin assets that we had acquired as NexGen and put them and give it a technical and financial focus, because Arrow was Arrow. We knew it was one of the world's best projects, even up to the 30th hole. We knew it was a monster, and so we still knew that we had very good properties in the eastern side of the basin, which we wanted to explore, and it was just a resource allocation. We needed it to give it its own money, its own treasury with its own focus, and incorporating the same disciplines that NexGen are founded on. And lo and behold, we've found another deposit. Craig and his team have done a phenomenal job in also adding to that portfolio with properties, and making the Hurricane discovery. And that's a different type of deposit to Arrow. On the side of the basin where the mill needs to be constructed. They're on the eastern side of the basin in the sandstone, so it's in a different technical setting with a different profile and a different size. But there's no doubt about it. It's a fantastic discovery, and the drilling that they're doing at the moment is to really lead towards defining a resource in the future. But that is still some ways off, because the press release the other week, there's more mineralization, and we still need to kind of get a handle on what does that look like. But We own 54% of it as NexGen, and I'm the chairman, and we're very, very happy with that investment. You know, we joke that our investment in ISO may one day pay for all the capex at Arrow. You know, we think it's assets in the eastern side of the basin, and the flagship there is currently Hurricane. Yeah, I think investors, you know, should take away that these things are very difficult to find. You know, the group employs a very rigorous process of target definition and highly efficient use of capital, and that's what you've got to do in exploration and development. But we exhibit all the technical attributes and experience and management experience to take these through right into production and reclamation in a highly sensible manner, with the environment, communities, all stakeholders, government as well at the forefront of our decisions.
Yeah, it's definitely they've definitely had a good summer themselves. Can you comment on which funds might show more interest after you put out a feasibility study?
Yeah, I think what Travis and I've been seeing, particularly since the price of uranium has risen at the beginning of COVID, at the start of summer, is that a lot more generalist fund interest has come into the space, and generalists that aren't maybe as technically experienced on mining specifically are very interested in the uranium space, and we've seen far more generalist interest of institutions into not only NexGen but the broader uranium space. And I think that's very encouraging for investors. With NexGen and the completion of the feasibility study, there's another layer of DD there for those generalist funds who are interested in uranium, in order to invest in NexGen. The fact that we're also on the New York Stock Exchange as well as the TSX, you know, it demonstrates that there's and from that perspective, we do appeal to the generalist, the funds out there, particularly the ones from the US and Europe who are mandated that they must see a New York Stock Exchange listing in order to invest. So I think, you know, there was a couple of answers there, but primarily generalists are more interested in, are now very interested in the uranium space, full stop, and that's good for all uranium companies. With respect to NexGen, you know, we have clearly a very high level of corporate governance in every respect, being listed on both exchanges, but also the form and content of our engineering studies in the past, and which will culminate in the FS at the end of this year, will be very advantageous for those generalist funds to have an extremely high level of confidence around the investment. So I think you're going to see more interest once.
Yeah, I might just add, Tina, that you know, the ESG investment pool is growing quite a bit, and you know, I think like everything, nuclear has kind of always been in this like middle ground where, you know, it's very polarized, and there's people that are scientific about it and understand the benefits and the risk reward there. You know, the safety record of nuclear plants is unbeatable. Although like when something does happen, it gets a lot of attention, but when you look at the statistics, it speaks for itself. The cost is coming down, particularly in developing countries like China, where they're able to do it with the advent of small modular reactors. That also reduces the costs even further, obviously. That's the whole kind of purpose of them. And I think you're seeing, you know, I think it goes more broad in the sense that like there's been a lot of articles, you know, renewables were kind of outlined as this like free, everything's green and it's all good type of picture that was painted. I think as, you know, it starts getting developed and they start expanding, you realize the supply chain of those is not green. It's not ESG friendly, you know, in terms of where cobalt comes from, or a lot of it comes from, or other things. So I think that kind of also helps people realize that, hey, nothing's free in this world. There are issues with everything that we consume. And so nuclear needs the to gain the respect that it deserves in terms of all the benefits that it gives. I think that's building, and as that builds and continues to build, particularly out of Europe, but as that moves to the United States, where there's obviously massive pools of capital, to the extent nuclear is included in that, it's a whole new pocket of capital that will be unbiased in terms of its desire to acquire shares in companies. And as we all know, in uranium, there's not very many, especially for large pools of capital. There's kind of like 2 or 3 investable names, of which NexGen's one of them. So.
Yeah, and there's a follow-up to this, which is kind of asking you to quantify the amount of demand that might come from that, but I would venture a guess to say a lot.
Yeah, I mean, ESG funds is a lot for sure, and it's kind of, you'd be throwing out numbers, who knows? There's some technical things at the end of the year where you could kind of put numbers on it, more or less in terms of indices that we can be re-included in or added into. The S&P TSX Composite Index is one that comes up at the end of this year, and it's looking good so far on balance. So that's kind of like a near-term technical one where you could see a lot of demand and kind of quantify that. But everything else in terms of generalist demand or ESG demand, it's really hard to put a figure on it. But I think your representation is the best, which is it's massive, massive pools of capital for sure.
There's another question from the audience about, I think on the last webinar, you mentioned there'd be, you should be expecting to receive the permits for surface work. Are you expecting to get surface work approval for next year? And in your view, are surface work approvals contingent on IBAs?
That question is, I don't think it was exactly what the company said it. I think overall the company is very confident we are going to receive the permit to take this project into construction and production. It'll be, we are going through the process of feasibility. We have been working on the information ever since 2013. We know we have employed an incredibly rigorous permitting process, and in terms of information validation, both from the resource perspective, the engineering perspective, the environmental perspective, community, government, all stakeholder perspective, it is elite. We are not confident, we are certain we will be receiving a permit to take this project into construction and production. There's a number of ways that can happen. There can be early surface works, or final completion at the end of the permitting process. But I just want viewers to know that the permitting process is staged, and even once you've got the permit, you're constantly in a permitting process, even during production, in order to demonstrate that you're maintaining the parameters of the license. So there's a number of different interpretations there. To take this into construction and production, and that is off the back of the work that we have done and the work that we are still completing. As I said, the biggest timetable there at the moment is our environmental impact statement, which we'll be submitting in the middle part of 2021. And as with any resource project, we'll be doing it in a manner which has the support of all stakeholders, and we are certain about that.
And what's your sense of timing on potentially sinking a shaft into and start building this mine?
Well, again, that'll be dependent on a number of factors. I can't say with certainty right at this moment, and I won't say with certainty at this moment. Our communication, we are very, very conservative in what we represent, and this will be no different. But I would like investors to take away that we are certain that this project is going to be receiving permitting and developed in the most optimal manner for all stakeholders. And when I say optimally, that incorporates cost, but also time. And that is the commitment and the delivery that shareholders of NexGen are going to experience with NexGen.
Shifting back kind of to the macro picture a little bit, without getting too political, obviously the US election is approaching. Any thoughts on how that's going to impact the uranium price? I think this is the first time in a long time that the Democratic Party has actually been more pro-nuclear energy or taken a stance on nuclear energy.
Yeah, I think, both sides of government in the US are very favourable towards nuclear energy. Nuclear energy currently makes up a quarter of the electrical grid in the US. So I don't see any election really altering the path of nuclear except up under both parties, no matter which one administration is running office from next year. I think the exciting aspect too is in the US they're extending the life of reactors as well, which have been previously forecast in uranium forecasts to cease at the end of their current licenses. But what we're seeing is all of those licenses are being extended by 20 years. And I think that's very, very exciting. And even in, where I'm from in Australia, the disposition towards nuclear is growing every day. And they've just nuclear repository in South Australia, where I'm from, which I never expected to see in my lifetime. And there was communities actually bidding for the project to be in their neighbourhood. So I think that's incredibly positive. The Environment Minister recently came out with the roadmap in Australia for clean energy into the future, and nuclear is a significant component of that, subject to having the public on board. But everything I'm reading is that the public are very positively disposed towards nuclear in Australia, and they've had the experience of a large investment in renewables 10, 15 years ago, which actually haven't met the power demand. And as a consequence, the price of power, particularly in South Australia, is actually one of the most expensive for a first world state or province anywhere in the world. And so I'm not bagging renewables. I'm a massive fan of renewables, but everyone needs to understand that a sensible power electrical policy generating clean air emissions, the base component has to be nuclear. There's no doubt about it. Take it from me, it has to be nuclear. No debate, nuclear has to be the primary base load source of that clean air, clean climate objective. Renewables complement that. And the development of renewables has to keep going on and on and on. There's no doubt about it. But in order to achieve these targets, even meet them halfway of these targets that have been committed to by countries right around the globe, the only solution is nuclear forming a very large component, base component of that energy mix. The outlook for nuclear going forward is incredibly positive.
Yeah, so I would agree. I think in the long term, there's definitely, I definitely see the value proposition of being invested in uranium and nuclear energy. In the short term, do you think there's a specific catalyst that drives the price higher? I think we've seen a number of catalysts over the summer and a number of reports coming out just showing how much the supply is going to be affected. When will that be reflected in the price?
Yeah, I think seasonally, the fourth quarter is always an interesting and exciting time in uranium pricing. That's when a lot of the demand is weighted to the fourth quarter and the first quarter of every calendar year. And when you throw on top of that, the production cuts, which are now just about to hit the market at the same time, I think this next quarter is very, very exciting. Time will tell, but all the commentary that we read, the experts that we speak to, proven experts that have been in the industry for a long period of time, I think this next quarter investors should feel confident that they're going to see higher uranium prices by the end of the year.
Yeah, to your point, Tina, you've seen everything you kind of need to see on the supply side. Like like if you start taking more pounds out now, it doesn't really matter. It's already an enormous deficit there. And so really the missing piece is obviously the demand coming back in a big way. And the demand's definitely there. The support for it's there, but it's always just the timing. Is it this month? Is it next month? Is it next quarter? Who knows? But we know kind of like general, like as Leigh was saying, we've been in contact with them over a long period of time. You get a sense of where groups are at in terms of their willingness to, put their money where their mouth is and actually sign contracts and enter into that demand. And, it's the most positive it's been in the history of NexGen for sure on that front. And all these things are not lost on utilities for sure. Like, you go down the list, all the things just in the US, like the RSA, the RAND sanctions waivers, Section 232. There's been so many things that are just peppered on top of this already. And then you add COVID on top as well. There's so much stress there. Everyone's well aware of it. It is difficult to know the exact timing, but we know we're in the final, the final minutes of the third period on it. We're not kind of like warming up for the first period.
Right. Yeah, for sure. I think fundamentally everything's pointing in the right direction. We're coming up on the end of the hour. There's one last question for Leigh on the intentions for NX Gold. Do you have any thoughts on plans for that company?
Yeah. So NX Gold was a gold-focused company when it was incorporated, and still has a very excellent gold portfolio of exploration properties. We appointed Phil Williams recently, who's experienced in uranium. I've known Phil since 2007. His experience in uranium is very, very strong. He's been to a lot of projects right around the world, and I think has a very good understanding of their respective values and opportunities. And so it's really a platform that we've created to invest in various uranium assets right around the globe. And I think that reflects our confidence in the uranium price going forward. I think I don't think it is very, very high. And I think Phil's in a good position to use his knowledge and experience and get some very good entry points into uranium assets globally. So that's what that is. And we're very supportive of that. So watch that space as well.
Well, thank you both for being here. Appreciate the update. It'll be interesting to see what happens with the Bankable Feasibility Study and also the macro picture in general. I think there's a lot of information that'll be coming out in the next little while that could drive the price of uranium higher. So
yeah,
taking the time.
Exciting time ahead, Tina and Deborah, and exciting for everyone who's interested in uranium, all uranium companies, and particularly NexGen. We're very excited about this next period. And I'd just like to take the opportunity to thank yourself, Tina, and Deborah for this Adelaide Capital platform. I think it's an excellent platform, and the feedback that we're receiving regarding it is excellent. And we watch it when we're looking at other commodities as well. So well done to you two. It's excellent.
Appreciate it. All right, have a good one. Thanks.